The value of the Bitcoin network can actually be calculated pretty accurately using Metcalfe's law, looking at the number of users and the participants in the network, looking at transaction sizes and volumes. And so we can actually come up with a pretty good method of calculating fair value. The problem is the price of any asset doesn't necessarily reflect fair value all the time.
Hey guys, welcome back to Library of Wealth. Today we have American investor Mark Yusko on the financial economy, Bitcoin, and the future of crypto for 2023. Yusko says that the key to Bitcoin is so much more than just a token of value, which is something he believes many investors overlook and underestimate. The level of trust that has been shattered for crypto at this point is unknown, but Yusko believes there are many more to follow in succession of the crash of FTX. We're already starting to see markets in the red, and many analysts believe this is only the tip of the iceberg for what the last few weeks of the year will hold. Let's listen to this interview with Mark Yusko as he gives his reaction after the crash in Bitcoin, as well as the current state of the crypto market and what investors can expect next. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
We go from 70,000, we start plunging, and we get to this spring around early June. I was down in Austin, Texas at a consensus event, and I tweeted out, look, no one wants to hear this. But the longer we stay at 30,000, and we had fallen from 70,000 down to 30, and we were doing this thing it's called a descending triangle pattern, where you keep hitting the floor and you bounce, but each bounce is lower and lower. So you make this triangle, literally. And I said, look, these triangles always resolve. Either you break out and go back up, or you break down and you fall in most cases around 50%. So I said, no, again, no one wants to hear it. We're going to 15,000, but that could happen. 6 days later, we had the June 15th plunge where we hit, 17.5 wick. We didn't settle that low, but that was close enough to 15. I'm like, okay, that's the end of crypto winter. What I missed was fraud, right? Sam Bankman-Fried and all his compatriots in Carolina, they committed massive fraud. I mean, unparalleled fraud in our industry. And it's going to come out how bad it was and how they were cooking the books and how there was no books to cook because they didn't have any money. And it was all just a Ponzi built on this FTT token. Make a long story short, that's the nor'easter. So while I believe we're in crypto spring, and that spring is where it's just volatile, kind of up and down until crypto summer comes again in advance of the next halving in early 2024. So kind of middle of next year, we should start to enter summer again and get back to positive. This nor'easter just dumped a bunch of snow and there was too much leverage again. And I didn't see it, right? And now look, we never invested in FTX. We never, did anything with Alameda. In hindsight, had I ever met Caroline, I would have run away like super fast.
Yusko says that the continued negative sentiment, which results in more volatility, is the reason why it's still crypto spring. Many people were unable to purchase Bitcoin this year because they lacked either confidence, guts, or money. According to Mark, people need to grasp that cryptocurrencies are the financial system of the future and our generation's greatest potential for wealth development.
I mean, the fact that that person was in charge of a multi-billion-dollar enterprise boggles the mind, if you've seen any of the videos or posts of her. So I believe that this squall, right, this storm, I think is the last cathartic unwinding of the excess leverage, right? Three Arrows Capital was bad, and there are a bunch of individuals who are over-levered. I could be wrong, but I think this is it. I don't think there's any other deep pockets of leverage, particularly fraudulent leverage, that are out there. So the fact that we've been pretty resilient here and we've bounced off the bottom, I think we're back to spring. The storm is past. There'll be a little bit more fallout as other people realize, and maybe in some of the illiquid tokens that FTX was part of, like Oxy and Liquid and things like that. Those are probably all zeros. But Bitcoin in particular, I think looks really good going forward. And people will start to realize that probably today we're below fair value. Fair value is probably somewhere in the high teens to low 20s, depending on which Metcalfe's law model you look at. So we're probably in a recession. It's a shallow recession, similar to 2001. 2001, we had the tech crash, and 2001 was when the bodies started to surface of the bad stuff. 2000 really wasn't that bad a year. It was the market peak. Market was only down 8% that year. 2001 is when the things like Enron and WorldCom started to come to light, and Amazon plunged 90+%. And the first quarter GDP was negative, second quarter was positive, third quarter was negative. Then we had 9/11 that exacerbated the problems. And the whole year we still grew 1%, but that was a recession, but it was shallow. And then 2002 was really the bad year. That was the down 20-something% year, because that was Enron, WorldCom, and all these bad companies that were doing bad things were basically flushed out. And so I can make the same argument today. And we had 2 negative quarters, and this year is going to be, very low GDP growth, likely a recession. Now, whether they deem it a recession or not, that's up to the NBER. And they keep clinging to this fact that employment's still high. I'm like, well, it's just because you count wrong. You take out all the people that are over 65 and say they're not working. If you've been to Walmart, you've seen that they're still working. And you make up this thing called the birth-death ratio that literally makes up jobs out of thin air based on some old formula that they've been using for 30+ years. Stupid. In today's technology, we know exactly how many people are working. We know who pays taxes, payroll taxes. We don't need the birth-death ratio anymore. So recession, different question. Interest rates, look, they raised interest rates to the point of breaking a bunch of stuff. We have the worst bond market performance in the history of the bond market, saying something, 140+ years, worst bond market. The worst performance of the 60-40 stocks and bonds, second only to 1931, which was the last time we turned a garden variety recession into a depression by over-tightening and passing tariff laws. So sounds familiar. That's the second piece of it. Then the third piece of it is crypto. Well, here's the thing. Crypto isn't correlated to any of that other stuff. In liquidation markets, correlations go to 1, fine. But the long-term correlation of Bitcoin to the stock market is 0.15. Why? Because Bitcoin isn't dependent on the things that stocks and bonds are dependent on: economic growth, interest rates, corporate profits, right? Bitcoin price is dependent on millennial adoption, right? Millennials have a larger percentage of their assets in digital assets versus traditional assets. It's dependent on the technology itself, the innovation of the technology. It's dependent on regulation, and there's regulation coming down the pipe. So the return drivers have nothing to do with traditional economic drivers of stocks and bonds. That's why it's uncorrelated. And people say, oh, but it's dependent on the Fed printing money. No. 1 Bitcoin equals 1 Bitcoin.
Yusko also says that another way to look at Bitcoin's potential ascent to his massive price target is to take note of BTC's historical performance each time it goes through a halving event. Yusko asserts that we will soon start to inflect and that the system needs greater newcomers and adoption. What do you guys think about Mark Yusko's opinion on crypto being the future of money and how Bitcoin will play a role? Let us know in the comments below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.